Hello, welcome to today's new episode. And today I'm going to discuss the company which I can say is among the most inquired company for me. बहुत लोग मुझसे पूछे हैं regarding this particular company at various point in time. So I thought of like making a small video on this. I will not go much deeper into this, but a few very important thing we must know about the company. But before start, I have a disclaimer that I am not giving any buy, sell, hold recommendation with this particular video. The stock or stocks which I'm going to name in this particular video are not at all my recommendation. These stocks are discussed just for academic purpose, for your understanding, and to go deeper to work on it. If you have any interest in this particular video, so you may seek your advice from the advice from a registered advisor. So without wasting time, I'm getting into the stock called RVNL, Railway Vikash Nigam Limited. And we all know that the stock has corrected in a decent manner in last in tandem with the market correction. Now the question is how the company is placed. Is it in a good position? Is it uh, what are the factors or let's say parameters are impacting its overall performance or likely to impact the performance of the company? These are the questions mainly sought by the investors, and I received lots of questions on this particular company. So let me tell you, we all know that RVNL is an infrastructure development company for railway, Indian Railway. So that is their core business and traditional business. So they started as a railway infrastructure developer, but diversified into many other segments over the period of time. So RVNL is a public sector unit. Indian Railway used to allocate infrastructure projects to this particular company. I must not say it's infrastructure projects. There are various kind of projects from manufacturing to uh, electrification. Various kinds of projects is made by this particular company. So that is their core business. But there is a sudden change which we must know. Change in the policy of railway. So that is something which may impact or may have impacted up to a certain extent to the overall performance, or let's say stock prices as well. So what are those factors? Actually, one factor, not so many factors, one factor, but very important factor. This company, or let's say along with this, many other companies have been incorporated for the purpose of building, uh, for the purpose of creating those projects for railways, whether it's infrastructure, electrification, whatever it is. But okay, so they used to get allocation of the job by the railways. It was the default. It used to happen till 2018. Afterwards, what happens? This allocation has started coming down, and railway has started making a norm of bidding for the project. So they are not going to, means after 2018 we have seen railways policy is not to blindly allocate to the PSUs, rather they were opening up the opportunity for everyone, means not only PSU, even private sectors as well. And it parallelly it helped them to reduce their cost as well. So without giving a straightway allocation, what they have started doing, that means Ministry of Railway has started doing, they have started accepting private sector participation along with public sector participation. So 2020, by 2020, the allocation, means automatic allocation, has already been stopped. So that over the period of time, it has impacted up to a certain extent. It's not a very big impact, but it's up to a certain extent. And anticipation of impact also made some correction in the stock, what I understood. So what was the impact? Impact is like the transition from auto allocation to winning bids, winning through bids, winning projects, getting awarded of the project. So that is the now it is not no more default, means you have to put lots of effort to win one contract. But what is the advantage? This type of company, let's say RVNL, this company has a prolonged history and you know expertise in this particular field. So obviously that is an edge which helped them to uh, win many projects over the period of time. And since let's say the allocation, auto allocation has been stopped, but over the period of time, they have won lots of awards, lots of bids, and sorry, they have won lots of projects putting their bids. Now they have uh, diversified quite a lot beyond the railways. First of all, with the railways, expertise in railways, they are able to get railway projects. They're very effectively worked in the metro railway projects. And not only in India, they have won or started already started working to get or win projects in the metro railways in overseas destinations like Turkey, like uh, Saudi, in many places. Peru, they are working out to get some metro railway projects in Peru. So this is the area where this company is has expertise and trying to uh, get the advantage with their experience. So they are successful, I would say. Apart from railways, they have started bidding for other projects as well. They have entered into telecom sector in the BSNL, like in this year, they have won BSNL orders as well. So that is their entry into the telecom segment. So that this diversification is very important when your auto allocation is going down, right? Or let's say auto allocation has been stopped. Like after 9M FY25, this company had an order book of 97,000 crores. You please note it, 97,000 crores. It's huge. And among this 97,000 crore, almost 47,000 crore was coming from the allocated projects, which was allocated them years back. So that allocation was very big at certain point in time, but gradually they are offloading or let's say finishing of the projects, and their allocated project value is or allocated project order book is going down in the total order book. So among 97,000 crore at this point, means till February, let's say, their allocated projects was only 47,000 crore, which are likely to be completed by another 3 to 4 years as per the management guidance. Afterwards, what will happen? So this is the transition. This is very important for all of the investors. This transition, how they cope up with this transition from allocation to winning bids. So they have already shown their expertise and diversified quite well. And they are compensating up to a certain extent. The latest management commentary said, means after Q3, they said like around their annual run rate would be around 28,000 to 29,000 crore, and they will be maintaining EBITDA margin of around 6%. So their means historical EBITDA margin is between 6.5%. So they are likely to maintain this EBITDA margin, and the current run rate is 28 to 29,000 crore per annum. That will be the addition in the order book. So this is the structure. Now, how will they compensate this deficit over the period of time? That is very important, because after 4 years that allocation will be completely zero, means because whatever the earlier allocation, that will be completed, and once that will be finished off, that will be delivered, afterwards your allocated order book will be completely zero. Now it is how much? 40 oh, he 47%, around 53% is allocated. uh, Sorry, 53% is 47% is allocated, and 53% is one bid. So another 3-4 years, gradual decrease in the order book, allocated order book, and how they gradually compensate that deficit, that is very important for the investors. So if they can manage it, so if it is 4x, means it's your order book to your revenue is around 4x. So it's significantly large. So it's means in terms of its order book, it's absolutely fine now, and the way they are executing, that is absolutely fine now. Now this compensation of the order book, lost order book due to transition, like in this transition period, is very important for us. That is something we have to closely monitor. It's very difficult to say today. Management will obviously say they will be. uh, I'm not very sure whether they have said, but if they say, if they claim, they will be, and that is most likely. So no harm in that. Like they must be confident. Management must be confident, but we have to closely watch how things are panning out. So at this point in time, correct anticipation, correct assumption is very important. Things are things look like falling in line as of now. Over the period of time, it will be clear. So you have to be very cautious about taking position in the company. Uh, do your own research and check with your registered advisor. And before that, there are many other companies in this particular site. We know IRCON, IRCON International. uh, IRCON, I think, yeah, IRCON International. So the company is pretty like in this particular trade, they are executing infrastructure orders, but their order book is quite low. I think its order book is somewhere around 19-20,000 crore, not more than that. Where this company's order book is 97,000 crore. As far as valuation is concerned, this RVNL is trading around 59x, 60x, costlier than IRCON. But true that IRCON's order book size is also very small. So we have to be very cautious and need to find out how the upcoming order book is going to pan out and going to put support to their order book top line and the margin. So far, margin seems to be maintained as per the management guidance. So this is also one sensitive factor, because this margin below 6% may be effective. I would say maybe a problem for the in terms of sentiment of the company. So anyways, so I hope that I have conveyed the key message to you. So thank you so much for your valuable time, and please don't forget to subscribe my channel. Thank you, and see you in the next video.